Okay, we're going to switch quickly before lunch. We're absolutely delighted to have some George Mattson from Wheels Up. He's come straight from announcing the latest Wheels Up results, but you're the first people who get to ask him any questions. So if George, you're there, brilliant. Thanks, George. You're having a busy day. And yeah, look, he's still wearing a suit, but we have got trainers. He's gradually adapting to Wheels Up.
Actually, you mentioned these AJ1s I have on. Check out the back of them. What does it say?
Branded Wheels Up trainers.
A gift from my team, so they're my new favorite shoes. I'm losing my Goldman Sachs uniform slowly.
The tie's gone. Next year it will just be a tracksuit. Okay, let's have the highlights of your Q3 results.
Today's a big day, it's earnings, but before I get to that, and please indulge me for 1 second, it's been a little bit of a busy morning. It's also my wife's birthday, and she just came in, so happy birthday. What better way to celebrate than listen to me talk at CJI, right?
I know.
It's perfect.
I hope you're going out for dinner later. Okay, I'm sorry you're having to listen. What are the highlights?
Yeah, so look, the way I would describe the quarter, Alistair, is it's another waypoint on a journey that we've been on since the Delta investment 2 years ago. And it's a multi-quarter, multi-year journey. I think we made a lot of progress on a number of fronts in Q3. We continue to accelerate the fleet transition. The Phenom 300 fleet that we only started to acquire a year ago. With the acquisition of Grandview Aviation and then some additional acquisitions after that, is now our largest fleet. And we're very encouraged to see that fleet is performing as expected, both from a reliability and operational point of view, from an economic point of view, and most importantly, from a customer experience and satisfaction point of view. And so we're seeing that validated. You know, the Challenger's not far behind. We started a little later. We didn't have the benefit of immediately coming into a fleet of scale like we did with the acquisition of Grandview, but that is also accelerating well. You know, just in the quarter, in the last month of the quarter, on September 3rd, we launched what we call our signature membership, which is the membership exclusively focused on the Phenom and Challenger aircraft. And that is off to a great start. I mean, in 60 days, you know, we're already crossed the 100 mark as far as members in that program. It is accelerating. Obviously, as you know, there's a longer than instantaneous sales cycle in this industry, particularly among corporate customers, where performance has been very strong. But at the same time, you know, the quarter had challenges. I mean, we're in the midst of a very complex transition. We're scaling down a set of legacy fleets. We're building up a set of next generation fleets. And right now we're managing a lot of fleets that are not at optimal scale. And so having said that, we also had our best operating performance quarter of our transformation in the last couple of years. So there's some noise in the numbers. We think there's probably 4 percentage points of margin noise in some of those transitional costs. But feel very good about the progress. The other thing we feel good about in the quarter is we had set out a goal to find $50 million of efficiency and productivity, and we've exceeded that. We think that number is going to be more like 70 plus. Some of that's already been achieved. Some of that's going to get achieved over the next quarter or so, but that's well underway as well.
And I know you can't do much forward advice or forward thing, but I think you've been public about the fourth quarter. You're optimistic.
Yes. Yeah, we think the fourth quarter is going to be our best quarter since we got started here. And look, we're starting to see the flywheel turn. Right now, as of the end of the third quarter, 30% of our fleet is the new generation, next generation aircraft. By the end of this quarter, that number becomes 50%. By the end of next year, that number becomes 80% plus. And so as we see the unit economics and operational efficiency of these aircraft be a larger proportion of the total, you have an acceleration effect that we are seeing and we expect to see in the fourth quarter and into 26.
So you talk about the transformation. There was a period when Wheels Up was getting in before Delta and Cox and the other investors came in. How would you describe Wheels Up's financial position now?
I would describe it as solid. I mean, we closed the quarter with $225 million plus or minus of $225 million of liquidity. We've dramatically reduced, by another 25% our EBITDA losses, 25% last year. So we're in the sequential, improvement. And we see positive EBITDA and positive cash flow in the near future, and we have ample liquidity. We also have, I should point out, really strong performance coming out of the other half of our business that we don't talk about as much, which is our global charter business, right? We happen to have
that's all going to be replaced by AI.
Apparently, I was listening to the last presentation. I was making a few phone calls in the back, but look, that business grew 14%. That's a growing, profitable business. It is also optimally balanced with our membership business. Today, we sit with 50% of our gross revenues or gross bookings in our membership revenue, and 50% in charter. And that charter business is growing very well, not only organically, but also on the back of Wheels Up members flying charter more and Delta customers flying charter more. A higher percentage of the block deposit that we used to see fully used on membership flight is being used on charter flight. And so our customers are kind of proving to us that this multifaceted, solutions-based offering that we're working to create is in fact something they're buying.
So the Phenom 300 is now your biggest part of your fleet. What's happening to the King Airs? Is there a future for Wheels Up with King Airs?
So look, the King Air was obviously the foundational product and program of the company. There's a lot of customers we have that love flying on our King Airs. It has been a challenging platform economically to have make work from a financial point of view. We've made very good improvement in that regard. We've shrunk the fleet. We obviously shrank our geographic service area to focus on the Eastern US from a nationwide footprint at one point. That's helped. We're driving a better sort of dynamic around price and cost. And we've improved the profitability of that fleet by like 2/3 from where we were. Part of that is just shrinking the amount of dollars and flight hours, and part of that is raw unit economic improvement. But look, I won't sugarcoat it. It's a challenging fleet to operate, and obviously the focus of the company is on our Challenger and Phenom fleet. But we're improving what we're doing on the King Airs.
Okay, and one of the things that I think Delta always planned to get close to Wheels Up, and then when the pandemic came, Delta had other things to worry about.
A few other things to worry about. I was chair of the finance committee in those times, and I think we had to raise $26 billion in like 60 days during the pandemic to keep things moving. So we were a little distracted, yeah.
It's a ridiculous amount. But how is Delta integrated into Wheels Up now?
Yeah, look, it's a one-of-a-kind partnership, and you have to really have worked inside of Delta to understand what strategic partnership means in the context of Delta, not only for Wheels Up, but all of their other global airline partners around the world, of which they have many. We're integrated at the front end with our approach to seeing customers, right? I mean, Delta has roughly 45,000 corporate customers, about 1,000 salespeople covering these customers, and our sales team and their sales team are going together to these customers through the front door with the Delta agreement in hand. Delta is often their largest aviation provider, and saying, we want to add Wheels Up to this as an extension of what we're doing at Delta, and providing incentives to customers to see that happen. And so that's very powerful. And that is the fastest growing segment of our business. It is consistently beating plan. In the third quarter, 50%, 49% of our sales were to corporate customers, which is a huge change from where Wheels Up started as an almost entirely leisure business, as you know. And I think, candidly, we're just getting started, and we're just scratching the surface. We only now, in my opinion, with the launch of the Signature membership and the new fleet, have a product that really is in the sweet spot of what the corporate aviation department is flying or wants to fly. And that, it really opens the door, really is the starting point for, I think, a really strong performance we're expecting out of that segment going forward.
Would you be tempted to go for corporate flight departments, also like larger cabin aircraft?
Yeah, so listen, I think that there's going to be many waypoints on our journey. I think the next waypoint clearly is the complete transformation and transition of our fleet. And I sometimes go to bed at night thinking about an ideal world where we have a whole bunch of Phenoms and a whole bunch of Challengers and a super simplified, reliable fleet. And I start thinking about what the utilization and efficiency and potential of that could be, but that's not the end point, that's a waypoint. And the next stage could be expansion into other geographies with a programmatic fleet offering. It could be obviously expansion into larger cabin offerings. That's all out in the future, I think, yes.
Do you need to own aircraft?
I don't think you need to own aircraft entirely. I think there's an optimal mix between owning aircraft and being asset light and nimble. I don't think entirely one or the other is optimal. And right now, as I mentioned, we sit at 50-50, and I kind of like that. I think these things are sort of counter-cyclical and supportive of one another. We have a fleet. A lot of the flying we're doing on that fleet are actually our charter customers in the US flying on that fleet, Delta customers flying on that fleet. And so there's synergies between these capabilities that I think we're starting to realize.
Okay, you've got a tough question from Daniel at Ironbird Partners.
Thank you, Daniel.
With Wheels Up shrinking gross loss to 0.2 million over 9 months, but still losing 265 million net, he's been reading your announcements. What threshold of further losses might prompt Delta to pull back? Just make it clear that's from Daniel, not from
you. Well, Daniel, it's a good question, but I think there's a very simple answer. I think if you think about, I'm not here to speak for Delta, but and I'm sure there's some level of losses out there that could possibly cause anybody to change their mind. But what I'll say is this: when you look at how we're going to market together, when you look at how this has been integrated into their core strategy. So let me back up a second. Delta's strategy centers around being the premium commercial airline. They view Wheels Up as an extension of what premium means, and we're introducing this to all of their customers. And so the question I would kind of ask back is, what would you need to believe to want to walk that back with all of your important customers? And the answer is, I think you'd have to have a very different view than everybody has today. The one thing I'll just say on the economics is, these things can flip quicker than you think. The unit economics of what we've been doing and the unit economics of what we're going to be doing aren't incrementally percentage points better, they're multiples better. When you look at the gross profit per aircraft of what we're now flying versus what we were flying, it's multiples. And so there are huge opportunities here to change the face of that P&L. When you run an airline operation, as everybody who's in this room knows, it's a tremendously high fixed cost business. But the flip side of that is when you begin to cover those costs and you start to get the benefit of operating leverage, and those last few hours of flight, those last few hours of utilization start to drop 90 cents on the dollar to the bottom line, it can turn pretty quickly.
I might look at the question the other way around. At what level of financial performance does Delta buy the whole company?
Yeah, I don't know the answer to that one. That's above my pay grade.
It's above, you've never discussed it.
No.
Someone else is saying, with adding the Phenom 300s, are you seeing less demand for the King Airs because it's slower? And
it's not, so we've seen some shift of demand from King Airs to Phenoms, particularly, and by the way, I love how people from the other side of the ocean call them Phenoms, by the way. My head of sales is from Great Britain, he calls them Phenoms, but anyway, I'll call them Phenoms. We've seen a little bit of migration from King Airs on the longer stage length flights to Phenoms, but the bigger migration is, if you think about what we've done, right? We've basically taken the Challenger 300, 350, and we're replacing our Citation 10 fleet. But then on the Phenom, which is a huge unlock, we've taken all the demand we had on Hawker 400, Citation CJ3s, and Citation XL, XLSs, and we're putting all of that demand onto one fleet. And so when you start thinking about, before you even think about the operational performance and efficiency and unit economics of the aircraft, we've taken 3 fleets and put it onto one fleet. And so, look, there's a lot of airlines that have done very well over time with the idea of simplified fleet platforms. We're borrowing some things out of that playbook.
Okay, final question. Is Wheels Up where you wanted it to be 2 years ago?
Has it already been 2 years?
Yeah.
Yeah, look, I think that we knew going in there was a lot of opportunity to build on what had been created and what was there. And we knew it was going to take time. And we knew it was going to be hard. And we knew it would be bumpy. So there's nothing in any of that surprised us. I think on the bright side, I would say that, the operation is performing as well, better than it ever has. This past quarter, we announced 99% completion. We announced 89% on time. These are all up meaningfully from not only sequential quarters on last year, but from the past. 24 brand days in the quarter, brand days a day with no cancellations. I used to see a relatively long list of 3-hour delays. It's like a couple now. And so that's super encouraging. And this is, again, with multiple fleets, subscale fleets. I can only imagine what my ops team is going to be able to do when we hand them a more simplified picture. So that's gone really well. I think the investment into the fleet came sooner than we may have initially planned. And so I can't say I was anticipating that before. But I also am incredibly excited by the potential it unlocks. And we still have lots of opportunity. We're offering a total solution set to the market, but we still have some separation between our Wheels Up member sales team and our Air Partner charter teams. And as we start to bring that together and really start to leverage the power of customer-centric solutions, it's going to be very exciting. So the long answer to a short question, we're about where I thought we would be. It's about as challenging, but I'm more excited, and I think we have a team in place now that is definitely up to the task.
Brilliant. I know you've booked a table for your wife at the Eldridge lunch outside. So thank you so much.
Thank you, Alistair.
Lunch is outside.
Thank you.
I can't believe you don't